Yesterday, the market focused on the European Central Bank's monetary policy meeting. The regulator announced a 75 basis point rate hike to tame soaring inflation. The euro edged down right after the meeting. However, demand for the currency increased when President Lagarde's comments came on. Lagarde said she expects a similar move in October. Indeed, more aggressive tightening can help support the euro. As for the European Central Bank's $5 trillion balance sheet, the regulator will perhaps discuss its reduction in October, as nothing was said on the matter yesterday. Speaking of Fed Chairman Powell's speech, he is strongly committed to fighting inflation, so investors currently anticipate another 75 points rate increase at the next meeting. His hawkish comments had no effect on the market yesterday because the larger rate rise was priced in by investors after the chairman's Jackson Hole speech. Back then, Powell stressed that the Federal Reserve would stick to sharp interest rate hikes to tackle soaring inflation. As for today's macroeconomic calendar, it contains no important releases. France will report on its industrial production. Inflation expectations will be published in the United Kingdom. The Euro Summit will take place and data on wholesale inventories will come from the United States. Anyway, all these events are of secondary importance. All in all, the situation in the market is stabilizing and the euro is getting stronger. Bulls have settled above the parity level. The bullish target is now seen at 1.0094. Should the price break through the barrier, it would then head towards 1.0137 and 1.0184. Short positions at these levels could be opened on a rebound, while shorts at 1.0194 could be considered after a false breakout only. If the price pulls back to 1.0040 or even 1.0011, long positions at 1.0040 could be opened after a false breakout, while longs at 1.0011 could be considered on a rebound, allowing an intraday correction of 25 to 30 pips. Bulls are likely to protect this barrier today to maintain the ascending channel. Speaking of the British pound, the situation on the chart looks rather stable, with a gradual reversal occurring in the market. The pair could break through 1.1605 with a target at 1.1690. Should bears become more active, it remains to be seen how bulls will behave if a correction to the downside takes place. Therefore, longs could be opened at 1.1560 after a false breakout or at 1.1516 on a rebound with the target at 1.1605. Should the quote break through the mark and test it from top to bottom, additional long positions could be opened with targets at 1.1644 and 1.1690. Shorts at 1.1690 can be considered on a rebound, allowing a correction of 30 to 35 pips. Meanwhile, shorts at 1.1644 and 1.1605 could be opened after a false breakout only. If bears protect the mark of 1.1605, the price could pull back to 1.1560 and consolidate below it. In such a case, the price will remain in the wide sideways channel in the range between 1.1460 and 1.1605. If the pair falls to 1.1516, longs could be opened at this level after a false breakout or at 1.1462 on a rebound, allowing a correction of 30 to 35 pips.